We learn the Pythagorean theorem. We learn, we dissected frogs and cows' eyes and hearts and stuff. We read books that are, hundreds of years old, but like there's no class on like, hey, taxes or investing for retirement or budgeting or, hey, this is what the impact of the student debt that you are planning on taking on is going to have over the next 20, 30, 40 years.
You never know where life's going to take you, but you'll meet some cool people along the way. Each person has their own story, and each moment is precious. So enjoy the moments and enjoy the journey. Only on the Dom Jackson Experience.
Of all the different channels, because at the end of the day, like one of the reasons that I went into financial advisory is because I'm helping people, right? And like we were in high school when the whole Great Recession thing happened.
Yep.
And there was like, I always felt like there was such a negative connotation associated with just finance and Wall Street and this and that. And then I had my first internship opportunity with a personal wealth management practice. And I saw that it's not Wall Street. Like these guys are not, working for the, ultra 1%, this, that, and the other thing. What these guys are doing is they're working with regular everyday people who are undereducated in finance. And maybe that's a little bit strong, but, I'll always kind of circle back to the actual education system. And I'm thinking about an introduction for the book. And like, we learn the Pythagorean theorem. We learn, we dissected frogs and cows' eyes and hearts and stuff. We read books that are, hundreds of years old, but like there's no class on like, hey, taxes or investing for retirement or budgeting or, hey, this is what the impact of the student debt that you are planning on taking on is going to have over the next 20, 30, 40 years. So, when I sit down with a person, whether they're 25 years old and just starting their life, or whether they're 55 years old and have been managing their finances themselves their whole lives, and now they're just starting to get into complex areas, whether it's estate planning, college planning, just financial planning for their different goals, they have no idea how to evaluate it. So, look, you look at the last 3-4 years and you have Bitcoin crypto mania, you have the Wall Street bets and the Dogecoin and the GameStop. Like the financial media is so focused on what is happening right now and how can we create ad revenue in creating hype and getting people to click on this story and to watch this segment. And that is like the total opposite of what people should be focused on with respect to making sure they have enough income to last them throughout their retirement. And that's a lot of a different way to frame it than, hey, I just want to invest and grow my money, because ultimately, what are you growing your money for, right? What are your goals? What are your aspirations? And, maybe you lay out goals and we run an analysis and say, you have a high probability of getting there without taking all this risk. So why are you taking all this excess risk when you could probably get a little bit more conservative? You can probably sleep at night a little bit better, and you can still do all the stuff that you have just laid out as your goals and your dreams for the next 10, 15, 20, 30 years. So kind of circling back, like seeing what financial advisory and personal wealth management was firsthand, ever since like my second week at that internship, I knew that this is all I wanted to do.
That's amazing.
So, I'm very fortunate in that standpoint of like being my age and having, the last decade of experience of working only in this field and knowing that this is really all I want to do. So, I definitely feel very lucky and happy to be in a place that I see myself in for a long time. But at the same point, like that doesn't mean it's easy. And, it's funny because it's the analogy I like to use. It's like going to the doctor's office, right? Like when you feel something's wrong, yes, you want to feel healthy, but no, you don't want bad news. And, a lot of the times you might not even know what's wrong until you go, or you might be worried something is wrong and nothing's wrong. The problem is with the doctor, generally something happens where you're like, I probably need to go to the doctor. With the financial advisor, all of the media in the world is focused on basically telling you you're fine on your own, but you don't get that for an accountant. You don't get that for a dentist. You don't get that for,
You
a
don't.
lot of different areas. But you turn on CNBC and they're like, well, you can do it all by yourself. Like, sure. And then it's like, okay, well, now that you're starting to make some good money and you have an emergency fund, should you pay down your debt or should you invest? And it's like, oh, well, I know 17 different stocks that this talking head and this talking head recommend, but I never thought about it in the context of, should I be investing or should I be paying down debt? Or should I be investing in a Roth IRA versus a traditional IRA? I don't even know the difference between the two. But hey, I know this tiny penny stock that my friend told me, or this, Dogecoin is up 1,000,000% in the last week, and I'm feeling risky. So there's such a need for it, but people tend to think that they're fine without it, and that's where it's a very hard line to flirt with. And again, it really just comes out to like trying to get myself in front of people in as many different ways as possible to show them that, look, trust is the first and foremost thing in my field, right? Like I read an article today, Cheryl Swoops, who was, in the late 90s, I guess she was the female Michael Jordan, and said she made $50 million in her career.
Wow.
And between bad advice from accountants and bad advice with financial advisors, she filed bankruptcy today. And I read these horror stories, and it's like, look, if there are people that I can help prevent making these mistakes and assist them in accomplishing their goals and dreams in life, because it really is big picture. Like, yeah, making a great trade on a stock, it's fun, but like that's not what we do by any stretch of the imagination. But it's hard, and we want to continue to try and get ourselves in front of people. And the first level is building that trust, right? You want to work with someone, and you want to have confidence that they have your best interest 100% in mind. And then the second thing is confidence, right? So like, I know a lot of people, and I'd like to think I've lived a pretty trustworthy life so far, and they have no reason to doubt me from a trust standpoint. But now it's like, well, you're young, or well, how much experience do you have? So it's hard to tell someone I am experienced versus if they see me, on LinkedIn, or if they see me posting stuff, or if they see this interview and they get a little bit of a feel for it, maybe, they store it in the back of their head. And then in 6-7 months, they see something else that I do. And then maybe I do get the book off the ground, and, we get it done, and then they read it and they say, all right, well, this is someone I've known for a while. They have given me no reason to believe that they do not have, the utmost integrity and honesty from the trustworthy standpoint. And it really seems like, they know what they're talking about and they know what they're doing. And then my other hope is that, we talked about it earlier in the conversation, but like, I'm passionate about this.
You are.
And a lot of people pick up on that. And people like to work with people who are interested in what they do, and educate them on what's going on and why we're doing certain things. And, at the end of the day, people like to work with, whether we're talking doctor, dentist, accountant, lawyer, financial advisor, people like to work with people who they like. And, you have these conversations, and, you get to build a rapport, and you get to build these relationships, and you see how they evolve over time. And the ultimate goal is that people reach out to their friends and family and they say, oh, you just mentioned that you're having a dilemma on college savings, or on estate planning, or on, hey, you're starting to make some really good money right now, and you're not sure which of these different types of accounts, retirement accounts, IRA accounts, that you should be investing in. I work with someone for the last 5 years, and I think they do a great job for me, and I think it's worth a conversation for you to have with them. And that's the name of the game right now, is to continue to put myself out there and show people that I am trustworthy and I am competent, and I like to think that I'm pretty personable, and can have conversations on a variety of different topics, and just generally be someone that people enjoy wanting to work with.
I love it, man. I love you touched on a lot of good topics there. What you were saying about I really like the metaphor you used about the doctor. Like, everyone, you can go to the doctor, and like, if you feel something, if something feels something, you want to feel healthy, but if something hurts, you get it checked out. But with money, they're like, oh, you can just do it on your own. Because that's so true. There's not enough money taught in school at all. And it is definitely, as I've been trying to learn more about money over the past couple of years, because I want to do more things with this and have my own business. So like, I'm looking at things like, I was reading up on inflation now. That's something I would never have done, years before. So as I try to educate myself on money, I'm like, all right, this is more in the field of where I'm trying to be as a person. And then what you were saying before is like the whole, the internet definitely has changed the game as far as, interacting with people and meeting people. Cause now, you have the ability with a video, a blog, a podcast to reach someone you never would have reached before without them knowing who you are, or someone who does know who you are as a person may not know what level of competence you are in your field. So I agree with that, putting out something, they can get a feel for who you are without knowing who you are. And like, that has its own level of either, opportunity, or its own level of financial gain, depending on what you're using that avenue for. But now it's out there. I think that is huge, and it's only going to go up more from here. Like, the fact that we're even having this conversation right now, we haven't talked in a little bit, but us interacting through the internet, seeing each other in passing, just we weren't talking to each other, but we were talking to each other at the same time. We were still
Of
in some form of
course.
communication.
But
And
ultimately, how did we pick up talking to each other? Because you were putting out great content. And first of all, the content was great. And I loved everything that you were talking about. And the diversity of the people that you have on your channel is awesome. But then the other thing that I noticed was I clicked on it. And that means the next time I opened up my LinkedIn, your next thing was right up top there. And I clicked on it again. And that got me thinking, like, wow, you do stuff, people start clicking on it, and it just shows up more and more. And I reached out and I said, dude, this is great. We start talking a little bit. So, like, we are a microcosm of what's going on in 2021 because, look, you live across the country. We haven't seen each other in a good little bit, but you're putting out good content, and like minds think alike. And I'd like to think that when we originally set this up, that we were going to have a great conversation, and it was going to be great content for you, and maybe it leads to the start of some great content for me. But everything that you're saying is like exactly how we got back in touch. And you are growing your channel by doing that. And that is a goal of mine. And how do you start? Well, you start with just starting. And that's hopefully what I'm doing here today. And if you can benefit from it, and I can benefit from it, and the people that are watching can benefit from it, I mean, that's the ultimate goal.
that is the ultimate goal. The whole serendipity of having all channels together, man. Like we said, we were talking about earlier, Gary Vee being like a huge his message, just starting and kind of putting out the content, I think is really, really so important, man. It's one of the biggest things I think overall, like just starting is just so good, because you're not really going to learn like the same thing you did with financial advising. I'm sure your first, couple things you did, you realized you had to build the trust first. That's a huge thing, because with me in personal training, it was like, oh, I have to build trust before you even get someone to listen to you. You got to build the trust with them. So that skill building of which you are with your craft, and like building that same trust with your audience, or with people that it's that same, a lot of the same themes play over and over again. It's just a new medium for it. So whether you're in the
Well, it's
financial
because it's
world.
just people and relationships, right? So like we can
Exactly.
talk business, we can talk friends, you can talk, significant others, but it all starts the same way. And maybe it's a little bit of a different order, right? You look at a significant other, you meet someone out, you get to know them a little bit, and then it's okay. We've had these experiences. Do we trust each other to take the next step? Whereas on the professional side, that trust is usually first, right? So for me, if I'm going to work with someone, I need to understand what they have and where they have it, right? Because if someone says, hey, here's an account, invest it to the best of your abilities. We were talking earlier about how, like, well, no, we need to understand where you're at right now and where you're trying to go. What maybe this goal, maybe these funds that you're giving me are for an engagement ring that you're going to buy in the next year and a half. I would manage that completely differently than if you said, okay, well, this is college funds for 18 years from now. And I would manage that a little bit differently than when you say, hey, this is my first, investment for retirement, which is 45 years away. So there's the barrier to entry, if you will, is for me to say, great, I appreciate that you have reached out to me and you want to work with me. But in order for me to give the best level advice, or the best level of advice that I can possibly give, I need to really see the full picture. And then the client or prospect kind of says, you want me to tell you every single thing about my financial life? So trust in that scenario is the biggest, it doesn't get bigger than that. And then generally speaking, once you get over that hump, then the law of inertia kind of takes over, where the person has the realization that I just opened up my entire life to this person. And, then you kind of progress through the steps. But it's, at the end of the day, it's trust, it's likability, and it's competence. And whether that's professionally or with a significant other or just with your friends, like those are, you look at the different things that you do throughout life, and those are like three of the biggest factors. And if you can, sometimes it bleeds over, and professional life turns into friendship, or, those type things. But trust is huge. And look, you can be the most competent personal trainer in the world, and you can have all these blogs and all these YouTubes, and your business can be totally clean, and nobody gives you any reason not to trust you, and you have the confidence. But now you start working with someone, and you're in your second session, and you say, no, that's stupid, you should never ever do that, I would never do that, you should do this. but little did you know, they're someone close to them has been giving them the exercise that they've been doing before, and now you've just offended them. So even though you're competent and even though you're trustworthy, they don't like you. So, it's kind of like a tripod, right? If you only have two legs of a tripod, that thing's falling over, right? They could like you and they can think you're very competent, but then they find out that you are lying about the people that you work with, right? You look over to the other side of the gym and you say, that person has been a client for the last year of mine. Look how successful they are. And then they strike up a conversation with that other person. They find out that they don't even know who you are. Well, they might have liked you beforehand and they might have believed you that, hey, everything you're telling me, you are competent and successful at what you do, but they can't trust you. So it's those three things together that even with two, without the other one, what are you?
That I really like that tripod metaphor. That's really good.
Warren Buffett has a great quote, and it's something along the lines of like, he talks about those three things, like hard work, something, and integrity. I think it's hard work, intelligence, and integrity. And he's like, those are the three things we look for in candidates to hire. However, if you don't have the integrity, then that's the most dangerous potential hire in the world. And you look at all these smart people and you read these books, and it's those are the three most important factors, because those are things we can control. Everything else is outside of our control. I start a relationship with someone and the market happens to roll over 20% in the first couple of weeks. I can't control that, right? Now, I'd like to think that we did all the things beforehand and we talked about the risks and rewards, and that's the name of the game in the market. We have two 10% corrections every year and a 20% correction on average, every couple of years, right? That's just the name of the game. So if I went into a relationship and I promised, hey, you're going to go up every single month, and then we, have a 20% correction, well, that's obviously not the situation I'm talking about, right? Because I can control the expectations and I can control a lot of the stuff, but I understand what I can't control. And that's why the things that I can control, I'm working really hard to make sure that I'm furthering, it all comes back to the biggest thing that I'm working on right now is how can I show people that I am good at my job without telling people that, because nobody's going to, hey, I'm good at my job. What does that mean, right? What's the track record? Well, I don't really have a track record because I wasn't really allowed to do some of the things that I would like to do at previous firms. But I can now. And that's the next step of the game. My hope is that, maybe in a year from now, I'm having you on my channel or something along those lines. But you got to keep kind of, raising that bar every day and trying to get better every day.
Absolutely. I'm hearing the passion, man. I love your energy for everything you're talking about. How did you get into the field? How'd you get into financial advice? You've been doing it for 10 years now, correct?
Yeah. No. So, well, I guess my first internship was the December of, I interviewed for my first internship in December of 2021. So we're approaching 10 years within the business. I've been licensed. I've been fully practicing since the beginning of 2015. That's when I was licensed and kind of ready to go. But we had an awesome human anatomy class at East, and I fell in love with it. And I definitely want orthopedic surgery was when I went into college. Hey, I was a pre-med major and I wanted to be an orthopedic surgeon, and chemistry was not for me. And by the halfway through my second semester, I went into a Chem 2 test, and I remember telling myself, if you do not do well on this test, then you need to switch your major. And I studied so hard for that test because I wanted to be confident that hey, if you put 100% effort into this and you don't do where you need to do, well, you've tried your hardest, and now figure out what works best for you. So that chemistry test did not go well. And then I went over into the accounting realm. And by the time I got to my junior year, meeting with the guidance counselors and the job advisors and whatnot that Temple had to offer, the thing that kept coming up was, yeah, you're good on all the math stuff and you got the grades and all this stuff, but have you put thought into something a little bit more people facing than accounting, because you have that kind of characteristic. So that's when I brought in my horizons from just accounting to accounting and finance. And then a few months later, I got that first internship. And then I did that summer internship, and they basically said, when we like you, the time frames match that when you graduate, we're going to want to hire someone like you in a entry level role. And that was pretty much it for me. I wound up going to that branch manager that effectively hired me. And I asked them, I said, look, I got, a little bit left of college, and a lot of what we're learning in college, even in finance classes, is nothing to what I've learned in this last internship. So do you have any book recommendations, authors? I mean, this was before podcasts, which is not before podcasts, but this is before podcasts were as prevalent as they were today. But I wanted to use my last little bit of college to try and gain a foundation for what I was actually going to be doing, which is personal wealth management. And college finance classes are like learning formulas, and
Yeah.
we can get into that at a later time. But basically, he gave me a couple authors, and I just dived in, and I pretty much known since then that this is what I wanted to do. So I finished up college. That team hired me, and then, like we had said before, that team actually split, and some of the team went to another firm, and I went with that portion of the team to the other firm. And then the pandemic happened, and roles and responsibilities changed. I mean, you think about going into an office every day, and well, now nobody's going into an office, so people have more time in their day, and responsibilities can change. So ultimately, I had to kind of make a decision on what was the best for me and for my practice. And look, I think everyone wants to, or most people, I would say, given the ability to go for it on your own or not go for it on your own, like that's a tough decision. It's a tough thing to think about. There's obviously more downside to being on your own. And I did join a team as well over here. But when I speak about on my own, I mean the ability to really kind of brand myself and put myself out there. And it's fun. You go on Instagram and this, that, and you see these cringy videos, and you're like, oh, I can't believe my friend's trying to do this, or I can't believe this person's trying to do that. But then you see a few months later, and you're like, they've developed their voice. Look at their following. Look at they're putting content out. I know someone who we went to high school with that was on a TED Talk, like literally a few weeks ago. Younger than even than you. And
yeah,
it's
I did see you on the TED Talk. Yeah,
right.
Awesome.
So I reached out, and we're talking. It's like, how did you get involved? And all this stuff we're talking about, it was like she realized she had a knack for public speaking, and she went for it. And it's like, okay, yeah, maybe those first couple opportunities weren't as beautifully delivered as the TED Talk that we both watched was, but like, you don't get that good by accident. You have passion, you have a drive, you think you want to do it, you try it a little bit, you perfect your craft, you hone in, and then next thing you know, you're having a TED Talk, and you're speaking in boardrooms of Fortune 500 companies when you're the youngest person in there by 15 years. And it's like, how the hell did that happen? It's like, oh, go back and scroll through Instagram or social media or Facebook, and you see those cringy first few videos. And sure, look, anyone who puts content out, you go back a few years and you're like, wow, that wouldn't have done that if I could have done that over again.
Absolutely.
However, you don't learn those lessons until you do it. And I'm sure, look, I'll go put some of the stuff out. Maybe I write a book and nobody buys it. And it's like, what did I just do that for? Well, I did that because I'm putting myself out there and I want to try and help. And comes back to those 3 pillars we were talking about. If you're putting yourself out there and you have good intentions, the worst case scenario is that you fail, which is only going to help you more in the long run. That didn't work. Now I can focus more over here.
Absolutely, man. Absolutely. That process, that game of getting to that next level and kind of starting off. I always like relating everything to school metaphors, because everyone's been through some level of schooling. No matter what you do, you're always going to start off at kindergarten level, no matter what that thing is. So you can't come in with high schoolers' expectations if you're at that kindergarten base level of what you're doing. So you got to go through that cringy stage. You got to go through that child stage. You got to go through that puberty over and over and over again, everything that you're going to do. So you can't, even if you are the age of 50, 60, whatever age you're at, if you're new at something, you're still going to be like a kindergartner, basically going through that process over and over again. So I agree with that so much. That cringy stage is needed. And, you're going to end up laughing at it because you're at least trying, and now you're getting closer to where you want to be.
Yeah. Or maybe, look, and some people do stuff and they're like, I never want to look at that ever again. And out of sight, out of mind. It's fine. You did it. Who cares? Look, the people that will wind up, maybe, obviously I wouldn't call this person a friend, but hey, maybe you hear that one of your friends was talking to another one of your friends, and they were, talking shit on, did you see how stupid they look doing this? Or did you see how stupid they look doing that? Generally speaking, those are the people who aren't going to put themselves out there. And when you talk to people who are successful and who are putting themselves out there, and maybe you're embarrassed of the content you put out. Well, if you are, then you say, hey, take a look. Tell me what you think. Like, give me some pointers. And I guarantee you, people like yourself, like, let's say I do my own channel and I reach out and I say, hey, Dom, I really didn't like the way that this kind of turned out. But do you mind giving this a watch and maybe picking a couple things that you think I did well on and I can focus on that for the next time? Because if you don't have that type of attitude, then you're not going to succeed at anything you do. Because I don't care how good you are at anything, you're going to have hiccups. And I'd like to think that I'm the type of person that, look, I'm gonna get knocked down. I'm gonna try and get back up. I mean, look, we played high school football together. We were not the best high school football team, as you know, and there was a lot of getting knocked down. But like when I look back at that experience, there weren't as many wins as we would have liked. There was a lot more losses and a lot more, you know, just tough weeks and tough morning after games where you're just beat up. But you got up and you went back to practice the next day and you looked around to the buddies in the huddle and you do it for them and you're working hard. And, when I look back at it, like it's all positive experiences because it was frankly some of the most adversity that I've ever gone through in my life. I mean, just not winning over and over and over again. And that was not
over and over again.
but
Oh
like,
man.
look, you look at the guys that, I played with for 4 years and look, there's so many good memories and there's so many good things. And when like, just, there's times, it's funny, there's times where you'll have a rough Tuesday or a rough Monday or a rough Friday. And you think back and it's like, if I got through that, I'm going to get through this week. Right. Because at least I don't have a concussion right now. Like you think glass half full, like at least my body isn't really sore and I'm worrying about the mistakes that I made in the last game. It's just one big learning experience. And the takeaway is like, we want to surround it. Like you obviously can't choose verbatim who you surround yourself with, but you can control a little bit of that. And if you can continue to put yourself around positive, driven, trustworthy people that you like to be around, that's going to rub off and you're going to have success. And it might not happen overnight, but like, they always talk about like loving the grind. Like, again, back to Gary Vee, like all he talks about is like learning from failure and loving the grind. And if you only appreciate the winning aspect of it, like, you look at Tom Brady, you think Tom Brady's the kind of guy that's like, I hate practice, like, oh, I don't want to go to mini camp. I don't want to watch this extra film. Like those type of people love it. And there's a reason that they're very successful in the game because you have to practice a lot. You have to put in the time. If you don't enjoy putting in the time, well, then it's going to reflect in your overall performance. So it all comes back to the same central idea of what we've been talking about. And it's, if you work hard, if you put yourself out there, if you are open to constructive criticism, then things are going to work out. All you need is to have a little bit of patience and confidence, and it's all going to work out.
That's absolutely true, man. That our football team definitely taught me a lot about adversity and just taking it on the chin and being like, well, it is what it is.
It is
And
what it is, man.
And Tom Brady definitely loves practice and loves every ounce of his game because definitely don't get to that level without loving what you're doing. I also like to think about it as like, loving what you do, and then like the same way, you got to work in your craft, the same way like Picasso or Michelangelo, like they were so focused on getting better at what they were doing and getting their critiques and finding that angle that like it wasn't even like I doubt they even paid attention to anything else because they were just only focused on trying to get to that next level to make their masterpiece. And that's all it really is, just reinforcing yourself, seeing what you're doing wrong, improving. And people are going to talk about you no matter what you do. When you're losing, you're winning. Like, and that's what I feel like that's the biggest bubble a lot of people get through. They're like, oh, the second you want to try something new, like, oh, people are going to say some things about me. People are going to judge me. There's just people talking. It inhibits more people than anything else. And once you find like that insular, like, oh, I'm just going to do what I'm doing, focusing on my craft, focus on me. It's so liberating. You get so much freedom in yourself. So then you're allowed to take the L's and take the loss that you're going to take regardless. So I think it all goes back together, kind of one big circle of the three pillars all over again. And just taking another chin and just building up from there.
Yeah. Yeah. The one quote that it's actually a quote from so the author that old branch manager told me to read about, his name is Nick Murray. Okay. And he's a financial advisor and he updates his book every 7 or 8 years, and it's had a ton of great stuff. And I've really kind of adopted his philosophy. But one of his quotes is, that which is not impossible is inevitable. Right. So it's like, is it impossible to grow a great YouTube channel, great LinkedIn presence? No, it's not impossible. If you work hard and you consistently do it and you take those L's in stride and look, nobody wants to take L's in stride. That's nobody's in this game to take losses, but they're inevitable as well. So the question is like, what can you control? You cannot be undefeated. That's just not how this works, right? But if you can understand that those L's are going to happen and you can have the right attitude towards them and you can take the one or two positive things about them, like when Tom's looking in the film room and, and he's talking to whatever guy and he made his bad read. And he's like, all right, well, I'll tell you what, next time I play that team, he just picked me off because he jumped around over there. Well, we're going to have that play in the playbook. We're going to fake that pass. We're going to hit him with a double move. And then, we're going to get him to bite the cheese. And it's the L's are going to come and you need to know that beforehand. And if you can have the right attitude about them and the right persistence, that which is not impossible is inevitable. And I also think you also need to truly believe that, right? Like if you leave that seed of doubt and like, what if I do this for 10 years and my videos in 10 years are getting the same amount of clicks as now? Well, that's just not practical. If you do something for 10 years, you're going to be good at it. So if you have that attitude about it, well, then there's no doubt in my mind or I'm sure in your mind that in 10 years from now, if you stick with this, you're going to have an awesome YouTube channel. And, who knows what kind of opportunities are going to develop from there. I mean, you talk about your business and like, I'm sure it's all a parlay to look, if you can, for you, get people to watch my videos, step that I'm sure you have in mind. And then the next step is somehow turn them into clients. And, we're in similar fields. We are providing people advice to help them just have a happier and positive and hopefully longer and more fulfilled life. So, you're not necessarily in the market for like, okay, buy my thing for one time and then never think about me ever again. You have the ability to, and look, the social media revolution for you, you can coach people from afar. There's no limit to what you can do. You can expand to different areas. You can put people underneath you. You can build a program, but the more people that watch your YouTube videos, it's just look, it's a game of numbers, right? If you know that one out of every however many people watches is going to reach out for a potential consultation, and you can close one out of every two consultations, well, you can back it into, look, one out of every 4 videos I post, I know I'm going to gain a client. And therefore, I need to post 2 videos a week or 1 video a week. And then I'm going to get 4 videos a month, 1 client per video. And that's similar to what I do. The amount of people that I reach, I know, we have like different campaigns that send out marketing emails. And we know that like the click percentage is 20%. And of that, people are going to, click into a link within the email certain amount of time. And then of that, you drill down and it's like, okay, so I now know that every one of these, I need to have this amount of people in order to turn one of them into a client in this amount of time. And if you can think about it like that, well, now it's just a numbers game. You know that four videos equals 1 client. I know that, 3 LinkedIn posts or 2 blog posts equals 1 client. Now I've taken the focus off of the output, which, hey, maybe 1 month you put out 7 videos and get no clients, but you know that over the last year, you've put out 30 videos, you've got 10 clients, that's 1 out of 3. Right? So the 2 months you go blank 0 for 6, well, you probably know intrinsically because you are confident and because you are good at what you do, that the math is going to work out. There's going to be some reversion to the mean, and maybe you get 2 or 3 clients next month. But to land the plane, it comes back into like understanding that there are going to be L's and understanding that you have to have the confidence and the persistence to push through, and the belief that if you do all of the right inputs, that the outputs will kind of take care of themselves.
Absolutely. That is nothing but the truth, man. Nothing but the truth. Have you found you being 10 years into your field now, have you found what's one thing that you went through the process of that you feel like you fine-tuned during this process of your 10 years working on your craft? Like what's the one thing that you felt like in the beginning you were definitely pretty bad on, something that you've lived this
So
ethos
in the
for?
beginning, I really thought that this was a lot about like stock picking, right? Because that's what's glamorized on TV and in the movies and this and that.
That's what I thought it was about mostly.
And I used to try and kind of like rush into trying to show people that I know what's going on. I know what they're talking about on CNBC. I know the hot stocks. I know the this and I know the other things. But as I've gone through the financial planning process with, my clients over the years, and with team members, clients, and that sort of thing, I've really understood that that is like, that can be a little bit of fun on the side, but the real game here is helping people be confident that what they are doing is the best case scenario, or I'm sorry, what they are doing is going to help them not outlive their retirement. Because yes, it's great to pick a stock and it goes up a lot in a short period of time, but at the end of the day, the greatest risk that investors, and we are all investors, because there's going to be a day where we want to retire, and then we're going to have to rely on, whether it's Social Security, pensions, retirement funds, taxable investments, we're going to have to rely on those investments to kind of fund and fulfill that retirement. So investors' biggest risks, or let me rephrase that, the investor's biggest risk is outliving their funds in retirement. And helping people understand what their true risks are. And obviously, look, there are other goals. There are college goals, and there are estate planning goals. And maybe, you want to buy a house in 5 years and upgrade from your first home and buy a car and do this and do that. And yes, those are all ancillary and those all play a part. But when we're thinking big picture, like you read these articles and they say, hey, put X amount of percentage of your income into a fund and do this and do that. Why are we really doing that? We are doing that so we can retire and have money to live off of. So framing conversations differently and getting people out of, should I buy Coke or should I buy Pepsi, or should I sell Apple or should I sell Google? Because, look, that's fun. I do have a passion for that. And a lot of people I work with have a passion for that. And we do have those conversations, but we have those conversations as satellite conversations, with the greater emphasis being put on the factors that aren't glamorized. Should I be paying down debt, or should I be investing, more in my 401k? Or, should I be putting money away for college, or should I be putting money away for retirement? Or, then you get into harder conversations where you're talking about, maybe like family health and insurance and things that people don't want to talk about. So the thing that I've learned the most is helping people understand what the biggest risks are and how to take advantage of the opportunity. Now, kind of pivoting to working with younger people, how to take advantage of the time that we have on our side. So if the biggest risk is outliving our retirement income, outliving our funds in retirement, then that means our biggest opportunity is accumulating and growing these funds until we retire, and really backing away from the conversation of, should I invest in Apple or should I invest in Google, and really focusing in on how much you should be investing in general. Because at the end of the day, I don't know if Apple's going to do better than Google. I don't know if Coke is going to do better than Pepsi. My gut says they're all probably going to do pretty well. And that is where, if we can get the focus from the individual minutia like that the talking heads want you to think about, and that you're, the pop-up ads, and you scroll through your Instagram and you see, ads for these cryptocurrencies and all this other stuff that is getting your eye off of the prize. And the prize is being able to retire and enjoy the last, quarter to a third of your life without work. The prize is not stressing about your investments in the short term, right? We want to get it so that you don't have to stress about what you are currently doing. And if we can do all of that, and we can be confident that you are putting away enough of your income into the appropriate funds for your specific situation, and then, yeah, sure, we can end the conversation with, all right, well, if 95% of your funds are in this broadly diversified allocation of different mutual funds and other investments that we feel are going to help you meet your long-term goals, well, with that last 5 to 10%, sure. Now let's have the conversation of, all right, let's pick some stocks. If you feel strongly about a certain, maybe it's solar technology, maybe it's insert whatever niche you want, then we can certainly pick a couple investments and get a little bit more overweight in that. But that is the last part of the conversation. The bulk of these conversations and the bulk of what I have really learned is that like 90 to 95% of your long-term return is going to come from like the decisions that you make. Like, okay, are we putting away enough? Is it diversified enough? Not over diversified. Like the goal is not to take a 401k, look at the 40 funds and say, okay, let's put 2.5% of every fund. So it's making sure we're doing the right things with what we can control. And, then you have a little bit of those conversations on the end if that's what they want. But it's certainly something that I would never lead with anymore. Whereas before, I would sit in a meeting when I first started and I would have my notes about, hey, CNBC loves these 4 stocks, or this, is really going to happen, or we feel really strongly about the US. I remember when I first started working, there was, the US dollar was appreciating at a significant rate. And I was talking about, well, if you want to invest in Europe, do we want to hedge against the currency? And, there were some people, there's sometimes where conversations would come up where I realized that this person just wants to make sure that I'm competent and I can kind of talk the talk. But I've also learned that you don't want to lead with that, right? It's not about showing someone that I'm the smartest person in the room, right? It's the furthest thing from that. There are tons of people that are way, way, way smarter than me about, investing and stock picking and financial planning and all of that good stuff. Now, do I feel like I'm more than competent enough to hold my own? Like, absolutely. But in the beginning, it was about, hey, I'm just out of college. How do I show this person that I can do it? Whereas now it's like, I don't need to have that nervous energy where it's like, I need to show you what I can do. It's more about helping you understand that I have a really good handle on what my real job description is and how I can help you with defining your intermediate and long-term goals and then building strategies to get there. And oh, by the way, if you want to ask me my opinion on what the US dollar is going to do, or, what's going on with the yen, or, what is my favorite cryptocurrency or any of that stuff, sure, it helps to be able to talk the talk, but letting the prospective client kind of dictate that part of the conversation and not push my agenda, and to try and be a little bit more relaxed and to help them focus on the bigger picture stuff. That's the biggest thing that changed between when I was an intern 10 years ago. And even when I really started practicing, I guess, what's that, 7 years ago or so, to where I'm at right now.
That's awesome. That's awesome. I think I agree too on the fitness side of things, being able to take that step back from being like, oh, I'm so smart, I can know all this information, give you all these industry jargon, and like, oh, you can be like this. But
That's exactly right. That is it's basically the same thing, right? So like, you think about when someone comes, it's very, very similar, right? When we're talking about investing or physical fitness for the long term, how is the first question not what are your goals? Because if someone comes into you and you focus, you build out a whole day where we're going to focus on the pushes on day 1 and the pulls on day 2 and legs on day 3 and then a rest day and then we repeat. Well, if they're like, yeah, my goal is that I want to be a power lifter and I want to really focus on my legs, well, you probably should have asked that question first, right? If I'm working with someone and their goal is, something different. I sat down with someone one time and they said that their retirement goal, they found a retirement community in Mexico that was very, very cheap and it was near a beach. And they basically had all the funds that they needed to retire already, because it was a, you think about retirement on the beach, like, oh, that might be very expensive, but it was, in Mexico, it's a little bit different. So I'm running through this analysis, and this was one of those first lessons, because I did lead with this person with, this is the strategy we're doing with all these different people. And they were like, great. Well, what's your strategy for someone who already has all the money that they need? And my only worry is that I don't want my money to go down. So in the scenario where we were talking a little bit ago about how if I put that money to work in the stock market and then the market had a 20% correction, well, I have utterly failed that client, because that client's goal was, hey, just don't lose any money. So those are the lessons you learn cutting your teeth early on, where it's like, what is my job? My job is not to grow assets. That's not my job at all. My job is to help people figure out what their goals are and then help them craft strategies to get there. But if you start off with a strategy before you know what the goal is, you've already lost. Right? Like, all right, well, we're going to come in and we're just going to just do curls all day long because that's what I like to do. Well, cool. I don't want to do that at all. I want to do functional, big body exercises to just work on everything. And I don't care about curls. Well, or maybe you have pull-ups in their thing. And, like I talk about working out my brother all the time, and he's got a shoulder thing and he can't do pull-ups. He can't do them, right? It's too much pain for him. So he'll do shoulders in other ways and he'll do back in other ways. But if you're not asking questions like that early on, and set someone up on a workout program, and, like my knee is painful when I squat. I love squatting back, in the day, because it was the one exercise that I could like kind of hang with people my weight. I always was like weaker upper body and had a good, strong leg foundation. But my knee hurts when I squat right now. So, I'll do leg press, or I'll do lunges, or I'll do this, or I'll do that. But I know that if I sit down with someone and they say, this is what I do with everyone, and on this day I see squats on Monday and Thursday, well, maybe you should have had a consultation and find out what my goals were, and find out what what I couldn't do. Or, just like how I'll have conversations, there are clients that say, don't put any money into Walmart or oil companies or gun companies. And if I were to lead with the funds that maybe just a broad S&P 500 fund, you're going to have exposure to big oil and big tobacco and big whatever you don't want to invest in. So it's all part of the process that I have learned and cultivated in finding out, because again, it's what are your goals and where do you want to go? But if your goal is, I don't want to invest in anything I don't feel comfortable with, well, that needs to be discovered early on. Because if you discover that after, hey, I put your funds to work in what I do with everyone else, well, then they say, I don't want that. Well, that's a really difficult conversation. And obviously we don't do, everyone has to agree on the investments before we kind of put them to work. But, there, and in that, there could be a husband and a wife, or, or a couple where one person feels strongly about this stuff and another person doesn't. And you don't even know that they feel this way until you're having the conversation. And the three of you, if we were 2 years ago, I'd say the three of us are sitting down at the dining room table having this conversation, which, I did have a home meeting for the first time a month ago in about 13 months, which was great. But, likelihood it'd be the three of us are on a Zoom call, and we are helping, figure out who these people are as investors, because until you have these conversations, you don't know. And that's half the battle.
That is half the battle. That really is half the battle. And that process is everything, and really understanding what people want and what they actually want to do and what they actually want to accomplish. So with that being said, what did I know we talked about the book that you're like processing now, but as far as like using what we've talked about already, as far as like, the 3 pillars and, understand what people need, what is your current thought process on that book, and like, what's your framework on that?
So look, I've always kind of conducted myself on the integrity side, that I'd like to think anyone that has known me throughout my whole life is going to say that I'm a trustworthy person. And from a likability standpoint, like, yeah, people like people, but that's not really the last fact. Like, you don't just work with people just because you like them. I work with, there are a lot of people I know that are, doctors and dentists and lawyers. And it's like, well, I guess on that time frame, like, you can only have one, right? So how do you differentiate between different people that you like and different people that you trust? Well, then you kind of want to choose the best person, right? You want to choose the one who's going to provide the most value. So, I look at all the different stuff we have going on, and for me, it's like, okay, my Twitter is whatever, mostly for sports and, a little bit of market type stuff, and other people that I like to follow, a little bit of humor. My LinkedIn, I'm starting to develop a strategy to continue to put posts. But, I just remember when I was at one of the other firms I was at, I was like, wait a second, every single person that I am not really allowed to work with for one reason or another, generally speaking, account minimums, that type stuff, they're all asking about, how do you allocate your 401k? What would you do? Well, I drafted an article that I thought was like a great article, and I tried to get it approved via compliance. Like, you can't do this. It's like, all right, well, now we're in this circular type situation where my LinkedIn, and fast forward where I'm at now, my LinkedIn doesn't have the following that I need it to have to really build my own content on LinkedIn. And I look in the conversations that I've been having, and one thing that I'm doing in these conversations, I'm letting people know, like, I'm having these conversations with a lot of people, and I'm thinking about kind of trying to put them into a book. what stood out about this conversation as the most impactful questions and answers that we had. And the other thing that I've been doing is I've been reaching out to people on LinkedIn, basically just trying to say, hey, look, if you were going to buy a book on investing and setting yourself up for a strong financial future as a 20 something, what are the questions that you would want answered? And for me, it's like a two-pronged approach, right? On one side, I am getting great information regarding what should I put in this book? What do people want to know? I mean, that's when you go to your target market, you ask them what they want, and then you try and deliver. The second thing is it's also prospecting in a way, right? So like prospecting in my field is it's just like, I remember cold calling in the beginning of my career. And if I had more, why are you calling me at 6:30? Don't you know it's dinner, with a few expletives in there? Like, it's just a very difficult thing to prospect on, right? So, I know that it's like every 300 dials, I'll have a conversation. And that conversation could be, why are you calling me at dinner time? It's like, okay, well, this is just not the right way to do it. So you think about people you went to high school and college, and people in your natural market, and like they all know what you're doing because they know you're a financial advisor. Well, what does that mean, right? So sometimes it can be difficult reaching out to people like, hi, I know you know exactly what I do, and I know that you could reach out to me with any questions that you have, but hey, let's work together. It's not how it works. So if I can reframe that into, hi, I am looking to continually provide value for the people that I do work with, and I value your opinion as a friend. And that's kind of the outward part. Internally in my head, I think of everyone as a prospect, right? Because everyone needs financial advice, and therefore, I give financial advice, and therefore everyone is a prospect. So I'd like to think that in a little bit of like a persuasive level, what I'm really doing is saying, hi, this is what I do for a living. If you have any questions about your own situation, I'd be more than happy to answer them. But instead of saying it like that, I'm framing it, hey, I want to help a lot of people. If you are thinking about something, odds are it's a question that I'm getting from a lot of other people. And I'm just trying to ask this to a lot of people so that I can, when I do eventually provide this information, so that I can be confident that I'm answering the questions that are most relevant to the people that would theoretically be buying this, $7 ebook, or the people that would eventually want to say, I actually do have a couple questions for you. And yes, I, throw them in your book, talk about them with other people, but, I'd like you to answer them now. So it's like marketing, right? How do you market? How do you try and come off as marketing without being salesy, it's hard to sell something and not be salesy. So I'd like to think that is a good framework of, hey, let's help people. We're going to help other people by seeing what things that you think about on the financial side. And if lots of other people are thinking that, well, then I'm going to put a lot of thought into it and devote a substantial amount of time into drafting, a very thorough chapter or two on it. But, oh, by the way, here is my answer to that question. So again, it's probably not on the trust side. On the likability side, sure, because this is someone trying to sell me without being salesy, right? So like when people wish me happy birthday on LinkedIn, there's a few people that have some creative ways to do it. Like one takeaway was this guy reached out and said, and I never met this person before, like, I can't wait till we can, have a drink and celebrate in person. And I reached out, I was like, I just want to be honest with you. Like, you won the award for like the most creative LinkedIn birthday wish because, frankly, you made me look at your profile, see who you were, make me think, have I ever had a drink with this person before? No. Well, hey, what a neat idea to kind of, and it was, obviously they were trying to sell me something and it was what it was, but they got in front of me.
Clever.
Like showing me that they had the ability to differentiate themselves from a sales standpoint. So that aids in the competence level, but they weren't salesy about it. So, again, a lot of this is just throwing stuff at the wall and hoping that it sticks. But I've gotten great insight. Like someone today sent me a flow chart, right? So again, the flow chart was something that as I was going through different ways to format it, right? how do I format this? Do I want to show it as like, hey, this person just graduated from college on an entry-level job, first 401k, and they've got some debt, and then take them through their life of, okay, now they're making some more money, they're doing taxable investments, this, that, and the other thing. Now they get married, now they're setting up college accounts, now they're doing insurance. Or do I try and make each chapter standalone so that if you already did the first 3 chapters, you can go right to chapter 4? But I've been trying to think of a way to really tie it all together. And I didn't think of a flow chart. And someone sent me over a flow chart. And it's like, wait a second, why am I writing a book when I can just do a flow chart? And then it hit me. What I am trying to do, like the flow chart did a great job of articulating the certain dilemmas that people have, right? So when you start a 401k, when you start making your contributions, one of the first things you have to decide is, do I contribute pre-tax money or post-tax money? That's a question on the flow chart. It says, does your 401k offer a match? If the answer is yes, then it says make sure you're contributing up to the match because they're giving away free money. And then the next question is Roth IRA or Roth 401k or traditional 401k, right? Pre-tax or post-tax. And then the flow chart just goes on. And it's like, well, now I got to go on Google or YouTube to find out what the difference is. And that is where I can provide the value because,
Gotcha.
Okay, yes, we have identified a decision that has to be made. And if you choose this decision, then these are your next decisions. And if you choose this decision, then these are your next decision. But how would someone who has never been versed in the difference between pre-tax retirement money and post-tax retirement money, how do you make that decision? What are the differences? What are the variables? Like, look, one of the conversations that I've been having a lot is if you're like pre-tax versus post-tax, what does that really mean? Well, effectively, you're paying a tax now, and then that money grows forever without tax ever again. Or you're getting a tax break now, and then that money grows, and then you pull that out in retirement at your normal income in retirement. Well, we're reading about the current administration is going to change some of these tax rules, right? So one conversation that I've been having is like, look, this is the income that you make right now, and this is your tax bracket right now. And when you're in retirement, this is the tax bracket we've laid out. So if you are in a high tax bracket now and you intend to be in a low tax bracket in retirement, we probably want to pay that lower tax. Now, there are a lot of things and variables that can affect it, but ultimately, like part of the conversation is we only know what these tax brackets are right now. We have no idea what they're going to be in retirement. If you look at a chart over the last 100 years of what the income tax rates were in the United States, we've had periods of 80%. So like we can craft a plan where, okay, let's pay tax later or now. Let's say we pay tax now because we are anticipating that in retirement, look, what the current administration is looking to. News broke over this past week about capital gains tax they might try and raise, and personal income tax they may try and raise. And most of this is for your ultra high net worth. But from a conversational standpoint, like, why should someone who is hardworking and driven and 20s, 30s, 40 years old, why should you not aspire to be in that top tax bracket? So even if you're not there now, it's worth having the conversation. So we could have said a week ago, hey, we expect tax rates, in however many years to be here or here or here. But this is, it all goes back into why the need is so significant for planning, because I always like to say, like, we draw this stuff in pencil. We know we're going to erase it. Things are going to change in your life. Things are going to change economically, like pandemic. Things are going to change politically with tax rates and all this different stuff. And it all comes back to, we don't know the future. So we're going to do our best to try and plan for the highest likelihood probability. So who's to say that when we're in retirement, tax brackets can't be in the 80 or 90%? It can happen, probably unlikely. Also, maybe they totally flip the script and they say, okay, let's change the US tax code and we're now going to tax spending instead of income. Well, now income tax rates are 0. So if you own your own home and you're not a very frivolous spender, hey, maybe we want to pay the tax later and not now. So people don't necessarily know the different decisions that they should be focused on when they are younger and they are not working with a professional. Mm-hmm. Should I pay down debt or should I invest more, right? Once you identify those decisions, that's only half the battle. Now you need to wrap your head around the different variables with, that the different pros and cons of each of those decisions, but also the variables that are completely out of our control, like, tax brackets. They can change every 4 years. And again, you look at, we've had 0, we've had 80. In the United States Constitution, like originally, the income tax was banned. There was not allowed to be an income tax. Then you start having some wars, and you're like, all right, well, the government needs to kind of, we're making a lot of stuff. We got to pay for it somehow. And then don't quote me, I was in the 40s, 50s, like post World War II, around then, just crazy, crazy high tax bracket. So we don't know what the future is going to hold. What we do know is where you're at right now financially, and how you feel about money, and what your goals and dreams are in retirement. And we can probably craft a pretty detailed plan on the highest probability way of accomplishing those goals. However, this is where it goes right back into those 3 pillars that we were talking about.
Mm-hmm.
The last thing I want to do is oversell and underdeliver. So a lot of my focus, when I'm educating and when I'm having these conversations with client and prospects, it's like, hey, this is the plan, but these are the things that can impact the plan. So if we start to see this, that, and the other thing, maybe we go back and we revisit what we've talked about. Because if we are starting, like if they do double the capital gains tax, which is something that was brought up last, not income tax, the capital gains tax. Basically right now, if you own an investment and for more than a year and you sell it, the most you're getting taxed is 20% federally. They want to bump that number up to 43%. So what that means is, like, this year, let's say that gets passed and they say that's going to take place in 2022. We can have a conversation that goes, okay, I know we didn't plan on having the conversation of selling this asset that is appreciated until your retirement. However, if we sell this today, you're going to pay 20% tax on it. But if we wait until 2022, that could be a 43% tax. This proposed change just happened this week, right? So there's so many moving parts, and it's, well, wait a second. What you're saying is, we know that if we are going to sell this down the road, it's going to be at 43%. Well, no. What we know is, let's say they pass this, then the new current law will be that if you sell something and you're in the highest tax bracket and it's at a long-term gain, it's going to be at 43% and not at 20%. However, that could change as well. You go back to, before the prior administration, the U.S. income tax rate the U.S. corporate tax rate was one of the highest in the world. Well, the last administration lowered that to be on the lower end. But the point is that every 4 years, every 2 years, Congress, everything changes. And we're going to draw this plan in pencil. We're going to, for where we're at right now, this is the best course of action, all things considered. However, we're going to review this quarterly, on a small scale, and we're going to review it annually on a larger scale. And then as changes come up and as rules change and tax laws change, and they change, tax date was 4/15 every year. Last year they bumped it back. This year they bumped it back. That gives a little bit more time to make a contribution for last year's income. So, it really is, it's very complex, but when you really break it down, it is simply about trying to make quality decisions with the information that we have. And once you wrap your head around the fact that there is a lot of this that we can't control, like if we knew how the market was going to be, what tax rates were going to be, and exactly how long you were going to live, well, I can craft like the greatest plans in the
Master
world.
plan
Like,
there.
we know you're going to have this is a lot of conversations that I have kind of, unfortunately, we have to talk about some darker stuff, whether it's disability insurance, long-term care insurance, life insurance, right? If I knew that I was going to die at 62 years old before I ever need to spend my money in retirement, what am I saving for retirement for? Live it up, spend all your money, right? Have fun. Sure, eventually wife, kids, you want to make sure you have something for them and make sure they can get down to college. But also, if I knew I was going to live to 120, well, that's a 50-year retirement. When Social Security was created in around the 30s, the average lifespan was 72.
Wow.
Full retirement age was 65. So the goal of Social Security was to help you in your last 7 years after you retire. Right now, if you are a healthy 65-year-old person, and again, these numbers are from a few years ago, so don't fully quote me, but we're talking about a healthy 65-year-old has a life expectancy to their late 80s. I think women was 92, men is like 87. Well,
Wow.
now we need a what? 67 is full retirement age. We're talking about a 20 to 25-year retirement. That is an astronomical difference from when these things originally were changed. Now, guys like you and I, they're going to change this. Our full retirement age is going to be 70. They're going to, right. We're probably not going to be able to withdraw Social Security at 62. Maybe we're going to be able to delay taking Social Security until we're 75 or even 80. The point is that, it all comes again from the trust standpoint. Hey, you're saying you're going to do all this stuff. Like, how confident are you? Well, I'm not confident in anything other than based on all the information that we have at our availability right now, and the stuff that you have laid out for how you feel about money and where you want to be in retirement, I'm confident that the decisions we are making today are the most prudent ones for our situation. However, we don't know what the future is going to hold. And therefore, we need to understand that this is going to be a flexible plan and it's drawn in pencil, and we will have to make changes. And again, when you sit down with someone and they try and explain how things that we are setting up now could potentially go wrong, and then those types of things happen. So like when I first started working, the market was pretty good. You think about 7 years ago, we were beyond the Great Recession and the pandemic was like not even a thing. If I were to sell people that, hey, we're just going to go up every year, every year, every year, and then we go into the pandemic and they say, I thought you said this, 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 and this. It's like, well, maybe I was wrong. Versus when I sit down with people, I explain that on average, the US markets have a 10% correction twice a year. The average one of those two is about 18%.
Okay.
Right. And then every 5 or 7 years, we're going to have a 30%. So when I was getting calls from clients last March, it wasn't, oh my God, I can't believe this is happening. Obviously, look, people weren't thrilled, but it was a crazy, crazy time. The thing that I could hold my hat on is that I always had in my back pocket the ability to say, hey, remember a few months ago, a few years ago, however long ago, when we were talking about how this stuff happens every so often, and how when this stuff does happen, generally speaking, the worst thing that we can do is try and sell and buy back later, or try and get too cute and try and get too concentrated. And they say, yeah, I do remember that. And I said, what was my biggest piece of advice then? We call them like lifeboat drills, right? You want to do a lifeboat drill before the Titanic is sinking. You want to have some prep before. So when the Titanic starts sinking, you can say, hey, remember your lifeboat drills. You go to this deck, you get in this lifeboat, you're going to make it. The ship is going to go down, but you're going to make it. So, it's nice. It's very nice to be able to go back and say, hey, remember when we talked about how this was going to happen? And how our instinct or your instinct was probably going to be, okay, well, we're in a pandemic. The market's gone down 5% in a row for 5 days in a row. We're down 30. My assets are down 30%. Let's sell now and let's get back in when we feel a little bit more comfortable. And, if you remember what March was like last year in the market, it was a V. I mean, we went down and we went straight back up in, a lot of the US markets, right? So there were some things that lag, like your cruise ships and your jets, your airlines, but there was a whole different subset of investments that did really, really well. So my point is that, one of the things I take pride in is that I didn't have any panic selling go on in my practice. And I like to think a lot of that is because we had these conversations beforehand. We said, we know every 5-7 years, we're going to have something that feels like the end of the world. And I guarantee you that the talking heads on CNBC are going to say, this time is different. This time is different. This time is different. But whether it's the pandemic in 2020 or the Great Recession in 2007 or the dot-com bubble in, 1999, everyone thought that was different. But, we all kind of lived on. And one other thing that I want to add there is, Warren Buffett took a lot of slack early on because Warren Buffett, as an investor, he tends to invest in your more traditional value type. He's not a tech investor. Let's put it that way. And a lot of the stuff that did really well off the bottom as the whole world was transitioning to this virtual landscape was unsurprisingly tech. So there was a lot of people on Instagram and TikTok and this and that who were like, taking victory laps and dunking on Warren Buffett. It's like, he's one of the greatest investors of all time. Like he invests a little bit differently and it's worked very well for him. But I remember reading his annual letter to shareholders, which is a great, great piece. And he talks about, it's like, yeah, I did some things that I regretted and I made some bad investments and I probably should have made some other investments. But his takeaway was, in all of my years of investing, there's been one rule that like holds true. Never bet against America. And I think that, when you take a step back and you think about how nervous he was during that time frame and how he can still basically say, like, look, this time isn't different. We are going to come out of this on the other side and, things are going to change. But ultimately, getting back to the conversation between me and a nervous, client, theoretically, we said this was going to happen. This has happened before. It's going to happen again. All we can control right now is making sound decisions for the environment we're in. The market is off 30%. When you look at, historically, the worst was probably already behind us at that time. And if you were to have sold in March, like the way I look at it as, when would you have felt confident? Because I play this conversation in my head a lot, right? Mm-hmm. You sold in March and it was down 30%. And then I call the client back, 2 weeks later. Now the market's only down 15% or 20%. You say, hey, do you feel confident? Like, well, no, because this guy and this guy and this guy says we got to test the lows. That was the buzzword when the market was bouncing off of the lows. It was, we got to retest. There's going to be a retest. Is the retest going to go lower, or are we just going to retest? Because everyone knows we're going to retest. That retest never happened. If you would have got out and waited for the retest, you would have never gotten back in. Off of the lows on the S&P 500, we're up 75%.
Wow.
And again, when we talk about overall risk in planning for retirement, what is the risk? The risk is that you outlive your money in retirement. Mm-hmm. However, when I talk to people who are like, younger people who are at least 10, 15 years from retirement, I always like saying, and I think that this really flips some traditional investing psychology about risk. Hey, stocks are risky on its head, especially now that investors like ourselves who have never gone through something like last March, like we were in high school when the last big one hit, right? You don't really know how you're going to react to that. And what was I getting at? I think I lost train of thought on that one.
Oh, you were giving me something. It was, you were talking about the lowest lows and then us being in high school.
Oh, gotcha. Right. So 2 years ago, let's say I'm talking with a 25-year-old and I'll say something like, your current risk. Yes, I've already given them the spiel about how the real risk of an investor is outliving their retirement, but your current risk, I would ask them, I say, would you rather miss out on the next 25% upside move in the market, or would you rather be involved in the next 25% downside move? Now, intuitively, before this happened, I was getting a lot of, well, I would much rather miss the next 25% because I didn't lose anything. Well, you lost time, right? Like as young investors, time is our biggest advantage, right? So now that we're on the other side of this thing, I can flip that on its head again and say, well, we had 30% last year and now we're 50% higher. And then I get back into, well, when do you think you would have wanted to get back in? At the very lows? Do you have any idea that like buying at the lows and selling at the high is like what every single trader, investor, large financial, like that's the goal of everyone. And it's just so dang hard to do. And odds are if you got out at 30%, you probably weren't going to get back in until much later. So it's helping people understand that like, yeah, being involved in the next 20, 30, 40% downturn, that sucks when it's going on. That is real fear. That is real uncertainty. That is real doubt. That is, for some people going to sleep nervous. Well, now that we're a year past that, it helps give great perspective to people like us who never went through something like that before. And now they can see, like, now I can say, okay, do you understand the real risk of missing out on the next 25% upside versus being in on the next 25% downside? Because it's the same question. If you try and get out on that downside, you're almost certainly going to miss that next upside. And note, it's not that I said you got out before the downside. You're going to get out as that pain is becoming real. and you're still going to be scared. And the horror story is the very first prospect I ever sat down with, ever. This was like it was a great experience for me, horrible for them. And like they went to cash in 2009
Okay.
and never went back in the market.
Oh wow.
And this was a conversation I had with them in, I guess, the beginning of 2015. And I tried to convince them to get in the market, and they were worried about the next one. And long story short, that wound up not being a client. It's hard to be a client if someone doesn't want to invest. But it was another kind of tool in my toolbox, if you will, of story selling, like why you can't time that stuff and why the focus has to be on the long term. Because what is the worst case scenario? The worst case scenario is you get out at the bottom and then you never get back in. And at that time, the market was up over 100% off the lows then. And now it's, even higher. And those people weren't in retirement. They weren't retiring in the next 5 or 10 years. So they had time on their side, and they made, the big mistake. They got out at the bottom. And, ultimately that right there, if I'm working with someone over a 40, 50-year period, if I can convince them to not make that one mistake, that one big mistake of pulling everything out and waiting and hoping that you get it right, like it's the single best financial decision that they could ever make.
Wow.
And, it's funny because they talk about elevator speeches, right? Like, what do you do? I'm a financial advisor. That doesn't mean anything. So when people ask me what I do now, I go back and forth on the psychology of it, right? Because what I really do is I keep people from making bad decisions with their money, right? But do you want to sell a negative, right? What do? I help people make quality financial decisions with their investments and their planning. So I go back and forth and I try and kind of feel out the situation before I decide which one I'm going to use. But like in a nutshell, that's what I do. And setting up accounts in diversified, diversified holdings and making sure we're doing the right things, like that's not the hard part of my job. The hard part of my job is when you get in situations like last March and you have people that are truly scared because they think this is everything I've ever worked for. And I'm watching it melt away day after day after day. And I want this pain to stop. And there's really nothing I can do or say to make that pain stop other than say, have confidence that in a year from now or 2 years from now, even, that everything is going to work out and that the world is not going to succumb to a deadly pandemic or a global financial crisis or a tech wreck. Whatever the catastrophe du jour is, it's going to be temporary. And look, in this scenario where the pandemic was like a permanent, obviously, look, it's going to be here for longer than we want it to be. But I think we know that the world is not going to end from this strain of what's going on right now. If it was going to end, then I guarantee you your worry would not be how much money do I have for my retirement that doesn't start in 30 years from now. And I am worried because basically nobody can leave their house because there is now an even deadlier pandemic that's killing everyone of all ages. Like, there's no real plan that you can have for that. Okay, here's our new financial plan. Take all of your money out in cash, buy tools and wood and go in the woods and live in isolation so you don't have that's not a financial plan. That's a doomsday plan, which is, it's a lot different.
It definitely is a doomsday plan. But Sean, you dropped a lot of gems today. You gave us a lot of tips and really shared a lot of bit of your story. If anybody that wants to contact you or find more information, how do they reach you?
So you can reach me. I'm pretty visible on LinkedIn. Just type in my name. All my work contact information is through there. So pretty much that's the simplest way to go.
Awesome.
I'm pretty responsive on LinkedIn. If you shoot me over a message, you'll see my work email. You'll see my work phone line. So whether it's shooting me a message on LinkedIn, giving me a call on my work phone, or reaching out on the work email, please don't hesitate. No question is insignificant, right? So I want to encourage anyone and everyone to reach out. I'd be more than happy to give you as much or as little time as you need to go over whatever you want to go through. And I hope if you take anything out of this, it's that I'm very passionate about what I do. I love to work with people and I love to help people. So for me, the benefit is not like the start of the relationship. For me, the real benefit is when you get a few weeks in and you get a comments like, wow, I feel a lot better about everything than I did, 3 weeks or 3 months ago. Those are the types of things that really give me that intrinsic value that what I'm doing is helping people. And it's not at the start, it's the 3 week conversation, and then it's the yearly review, and then it's the referral because I'm doing good work. And then I look at some of my oldest clients, and I look at the way that I've been able to kind of help them reshape the way that they look at what my role is, and how their investments kind of take over their own psychology, and how they just have confidence that what we're doing is the right thing. And that's what kind of, I was about to say, gets me into the office every day with my enthusiasm, when in reality it's walking 15 steps into my office right now. But that's why I feel very fortunate to be able to love what I do and be passionate about what I do. And please don't hesitate to reach out.
Love it. Well, Sean, thanks for being on the show. Guys, thanks for listening, and take care.